So, let's learn something about accounting, Chapter 3. So when they show the person winning on TV, you know, they're an awful lucky person, right? Chapter 3, what's it all about? Alfie. Alright, so we've got, let's see here, okay. We've got accrual, we've got revenues, we've got expenses. Alright.
What does that mean?
So here's what Chapter 3 is all about. We've got revenues and expenses that we have to recognize at the end of the month in order to produce accurate financial statements. How do we get accurate financial statements? Well, we recognize all revenues and all expenses. We have two ways of doing that. One is the cash basis of accounting and the other is the accrual basis of accounting. We in this class, and the rest of the 16 weeks, we will be talking about the accrual basis of accounting because that's what the rules of GAAP tell us we have to follow. Only if we're the smallest of companies, like most mom and pops that are real small or whatever, they are on the cash basis of accounting, which means they're basically using their checkbook, all right, for their accounting numbers. All right, so there's some buzzwords that we need to learn and put them into our brain. So under the cash basis of accounting, when do we recognize? And recognize to an accountant means record. We know we record in a journal. So under the cash basis of accounting, when do we recognize revenues? When we what? Got it in our hand. All right, so the buzzword here is we received it. And when do we recognize expenses under the cash basis of accounting? When we write some checks, right? You write the check, throw it in the mail. We're going to record that as an expense. Paid. All right. But those aren't the rules we got to live by. We got to live by these accrual rules that we're going to learn in Chapter 3. And under the accrual rules, revenue is recognized, which means it's recorded and earned when we earn it. Right, so the buzzword is earn. And under the accrual rules, expenses are recorded and recognized when they are incurred. So that's our buzzwords that we need to remember. Revenues are recognized when they're earned, and expenses are recognized when they are incurred. Under the accrual basis of accounting, we could care less about when cash is received or when cash is paid. The only thing that follows in our thought pattern is, did we earn it? If we earned it, it's a revenue. Did we incur it? If we incurred it, it's an expense. All right, everybody got that? So let's do a little group work project and see if you can apply what I just said. Oh, the other thing that we've learned is the matching principle. And the matching principle says that, hey, if we have revenues in one period, all the expenses that support those revenues have to show up in the same period. Right, so that's what the matching principle says. All right, so you guys, you're starting you own a stone and brick company. And during May, Artisan Stone and Brick, that's the name of your company, you laid a stone patio for Louise McGowan for a fee of $1,200. The job took 1 full week. Artisan expenses associated with the job are as follows. We have $400 of decorative stones. These stones were purchased on account. They would be paid for in June. We used 2 $10 cement bags. They were purchased and paid for in April. We paid wages to assistants of $200. These wages were paid at the end of the week. And one more. In addition, we spend approximately $600 per month on rent, utilities, and insurance for the office. Your job, the PSC hired accountant, is to compute the profit on the job. All right, so our period, we can take our periods and put it into anything we want. Our period is a 1-week income statement, all right? Because the job took 1 full week, so we're going to come up with an income statement for 1 full week. For purposes of this process, our month is a 4-week month. All right, you and your teammates produce a 1-week income statement. You all know income statement is now revenues minus expenses, right? So first thing you got to figure out is what the revenues are. Second thing you got to figure out is what the expenses are. Subtract the two and come up with net income. When you get an answer, raise your hand. I will check it out.